It's November 2nd. Wave trading process review. Talking about crude oil. December 2023 contract. Switch over to a 1 hour chart. Zoom out. So what you see here is about the last 8 or 9 days. Crude oil was up around $90 here. Dropped down to yesterday to about 80. It's about a 10% move down in 8 days. Got some poor structure here on the 1 hour chart. The red arrows indicate body gaps, price going down. Switch back to a 1 minute chart. On the pre-market data, we've got some gaps here. So wherever these red arrows are, if there's no overlapping second candle, then there's a gap. I have to draw these manually. So there's a gap here, there's 3 gaps here, there's high, pre-market high. So these are all targets for price to retrace to. So we're just gonna, here's the topics we're gonna cover. So wait for previous wave high breach, long entry on red to green candle, stop loss at previous wave low, profit targets at gaps, HOD, high a day, and futures options, high open interest or volume. That piece you can look up yourself just by looking at the futures options on the futures for the contract you're trading for the closest day of expiration. So waiting, first let's talk about how waves move. So here you can see market opens up, price is coming down. How do we know at this point here that price is actually is uh, stopping and going up? We know by the next candle, because this is candle. I'm going to zoom in on this so you can see it better on your screen. As soon as you get a candle body over candle body, that means price is no longer going down. Typically, we see this on a 2 minute pullback, and it usually takes the second candle to make the candle body over candle body. In this case, the 1 minute candle made the candle body over candle body along with the second 1 minute candle. So in order for, now we're looking for price to go lower, you need to see price closing below the wave 1 body. Not the low, just the body. So it's basically the low of this wave would be this body right here. Price is now closing below this. So how do we know that price is no longer going up? Well, we just got to close below the previous wave low. The second candle here, this candle, is now candle body under the wave 1. So price is now downtrending. Okay, price comes down. We get a signal candle here. Get a net 1 minute consolidation. How do we know that this signal candle means price is reversing? We don't. We don't until we don't have an indication until we actually see this next candle. This body, this doji, is candle body over candle body. So this gives an indication the price is no longer going down, it's now going up. In my process, I can't be long until I see price closing above the previous wave high for on a reversal. What that means is if price is currently down in a downtrend state, I've got to see price closing above the previous wave high in order to be long. So I can simply set a limit order here to buy contracts here, or I can wait for the candle to close above this and mark it in 1 second before the candle closes. If I get in here or here, where's my stop? My stop is stop loss at previous wave low. My previous wave low is down here. So my stop would be all the way down here. If you didn't get in on this candle and you're waiting for a pullback from a wave one, then how do we know that price is no longer going up, right? Well, here we get candle body under candle body. This is clearly telling us that price is no longer going up. Price continues to pull back for several minutes, for 1 minute, 2 minute, 3 minute, 4 minute, 5 minutes. But in the context of this move, price is only pulling back a very small amount, and it's pulling back just the height of this particular candle body. None of these other candle bodies are being retraced. When would I be scared about this collapsing? Probably if price retraced all of this. But I have my definitive stop there if I'm already long. If I'm not long, then I'm waiting to see a red to green move. So this is a red candle. This is a doji. It really doesn't have a color. And this would be a green candle, meaning price is going up. Long on this candle. Close right here. Stop here. Previous wave low. In order to be confident, confirmation, price is going up. The second candle gives us candle body over candle body. This terminates the down move. We now need to see price closing above previous wave candle body. We get a close above previous wave candle body. But what we need to see is we need to see candle bodies above the previous wave candle body. This is candle body and this is candle body above the previous wave high. So this is now previous wave high. We need to see candle bodies closing above and complete candle bodies closing above, which we see here is candle body clearly closing above this. Our targets, we already know, are at these yellow lines. We have our limit orders sitting there waiting to sell our inventory. We have our stop in here. If you have a stop down here, you could now move it up to here. Simply waiting for your target to be hit. I forgot about this target because there was a gap created on the first 1 minute candle. So if you put in a sell order there, you were filled. If you're carrying extra contracts, you know that the higher there are targets above. And typically in a trading day, there's a 5-wave move. So we should expect to see a 5-wave move. Here we've seen the wave 1 bottom to wave 1 up, to pull back, wave 2 begin, to the push up into the wave 2 end. How do we know this is the wave 2 end? You have to see candle body under candle body. This candle body is under this candle body. Does this mean that this is the bottom? No. Actually, price went a little bit lower, but this candle body is not above this candle body, so this is not a new high, and it can't be a new candle body over candle body in relation to this wave 2, because this is the wave 2 body high. This is just consolidation wave chop inside of this wave 2 structure. How do we know that price has pulled back and is now reversing? Well, there's a couple. The primary thing is you see candle body here, this doji, this candle is over this candle body. Yeah, maybe it's only a 1 cent or 1 or 2 ticks, but that's candle body over candle body. The white arrow tells you it's candle body over candle body. Long, get long here. Do not wait. Market order in 1 second before this candle closes. Your stop is right here. bottom of this candle, wave 3. To get confirmation that your entry is good, you should now see price going up. Price needs to go above wave 2. Price does close above wave 2, but in order to be the end of a wave, it has to be candle body above this wave. Technically, would be is the best. This candle body is above this candle body. This does complete this wave 3, which also both of these wicks hit that next target. Price then starts to go sideways and pull back. How do we know that price is done going up? We see candle body under candle body. So if price is making new candle body lows, it can no longer be going up. Where do you expect price to pull back to? Well, possibly down into this area. We don't, because this really wasn't much of a move, and these are just two big candles that basically made the move. And we have these, our stop would be here. So let's see if we get stopped out. Now we would have sold some inventory here. Our remaining contracts are here if we got in on this wave. Got stopped out. This immediately goes from essentially what would be a down candle, a red candle, to a green candle, an up candle. Why this is red text is because this pullback into a wave 4 beginning closed below the wave 3. That's a technical violation. But given the 1 hour chart that I showed at the beginning of this video, crude oil has pulled back 10% in the last 8 days. There's a lot of poor structure. We can expect price to move up, retrace some of that poor structure. Everything right here is telling us that this is a strong day where that structure is getting retraced. If you got stopped out here, you get back in long on this green candle, even if you market it in. But it's better to wait for the close. Your stop is right here, one tick below this. You need to see price closing above this wave 3 body high. Price is closing above the wave 3 body high. We now need to see a candle body above wave 3. 100%. This candle body, this entire candle body is clearly above wave 3. This candle body is clearly above wave 3. We need to see the push into this next yellow line, which is gap. Price can pull back at this point. Go sideways, finally pushes up into that gap. Got another little doji body. Price can actually, this could be the high of this wave. Let's see. Nope, it's not the high of the wave. Here's the high of the wave. How do we know that this was the final body high? Candle body, under candle body. How far back will this retrace? I don't know. Hopefully it won't come back and retrace more than the top of this wave 3 high. Let's see. Okay, so price is now pulled back. Didn't even hit the wave 3 high. It's already starting to go back up. Candle body over candle body. This now signifies the pullback is ended. Price is reversing. You are long. Stop is one tick below this. Price is going up. You're looking for price. Price can just wick up over a wave 4 into a wave 5 wick and collapse. It's not happening right now. We get candle body over candle body. This is a good sign. We can get a pullback. We see another target up here. Let's see if it hits it. Yep, rips through actually 3 of those targets all at once. Still strong. We know this is the end of the wave because the day has already occurred. But how do I know that that is? How do we know is we're looking, how do we know that price momentum has stopped and is pulling back? You need to see candle body under candle body. That candle body under candle body doesn't occur until this candle. This candle is an open at 81.85, and this candle closed at 81.85. So the bottom of this close and the open of this, these are parallel, and this other candle is just inside this blue candle. So these are parallel. It's not candle body under candle body, but yes, it does break this previous candle low, right, open here. And then you get candle body under candle body. So we know price is no longer going up. After a 5-wave move, you can expect a 3-wave pullback. Here's our 5-wave move. Wave 1 up, wave 2 up, wave 3 up, wave 4 up, and wave 5 up. We haven't hit high of day, pre-market high yet, but let's see if we get a 3-wave pullback. So pullback, candle body over this candle body, hard to see, but there is this candle body is above this candle body. So that means that going down has stopped, terminated here, goes back down, stops, terminates with candle body over candle body here, goes down. We see massive volume, 1,079 contracts, right? Stopped out the wave 4 low here, right? But didn't stop out this consolidation area here. Didn't stop out the lows of that consolidation. Candle goes green, long, red candle, yellow in my case, but a down candle into an up candle. That's a red to green move. Long on this candle, stop here. Okay, I'm going to remove some of these targets that have already been hit. There's a gap between these two candles, signified by the down arrow. Okay, there's a gap there. That can be your first target back up, right? So let's see what happens. Price goes up. Yes, hits the target. Get a nasty pullback right here, which would have stopped out any inventory you had here. However, this is the red candle, the green candle. So this one would be a little bit harder to trade. It's gone from red to green. You could have bought it. Your stop would be here. And then price just continues to go back up for the remainder of the day. So that was that candle right here. And you can see price goes up about $1.70 from there. So that was a 5-wave move with a 3-wave pullback, and you had some clear signals in here to buy, go long, got stopped out, but get right back in on the same candle. Okay, and I took out high a day here, meaning the pre-market high. So this covers wave trading, waiting for the previous wave high breach. So this is kind of the reversal thing. Wait for the previous wave high breach. If price is going down, wait for that previous wave high to be breached. It's not the end of the world. You haven't missed it. Let it go up, let it pull back, and just trade the waves. Trade long entry, red to green candles, stop loss, previous wave low. That's typically going to be that bottom candle, right? And profit targets at the gaps, which I just erased all of those, but you saw them before I erased them. That's it. Thanks for watching.